You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXRadio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from a little thing we like to call the Options Insider Radio Network. And if you haven't done so yet, I need you to run, not walk, over to your app store of choice and pick up the Options Insider Radio Network mobile app. We made all kinds of versions. We made a version for iOS, we made a version for Android, we even made a version for you Kindle Fire lovers. So only ones left out in the cold are you Windows Phone and a handful of BlackBerry users. So I actually ran into a couple this week here at this conference I'm at, which is surprising, and they were lamenting the lack of a BlackBerry app. So we'll see what we can do about that. If I sound a little different this episode, it's because I am recording from on the road here in lovely scenic Boca Raton, Florida, for the Futures Industry Association conference. I managed to grab a nice spot, croquet courtside, though, so it should add a little fun ambiance to the program. And I am joined by the usual cast of characters this episode, starting off with the man still shoveling out some snow while wearing some hot skates, none other than the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the program, sir.
Thank you. Always good to be on the Option Insider Radio Network, even on there's snow outside and there is a cold frost from Ukraine blowing over the market today, I guess, which we will discuss. So
gotta love that. Ukraine's always got some fallout coming our way, literal or figurative.
Literal or figurative. It's unbelievable, but that is how it is.
We are also joined by the man of many clocks and also many fancy hats, none other than the Viceroy himself, good old Alex Jacobson from Options Express. Alex, welcome back to the program, sir.
Hey, Mark, good to be here. Obviously a risk-off day in the market and a lot to talk about today.
And listeners, for all of those of you who lament Alex's vocal quality on the show, this will be one of the rare episodes where he sounds much better than I do, because I am beaming in remotely, so he gets to rub it in on me today. And we'll be joined a little bit later by good old Uncle Mike Tusaw, who is wrapping up a few issues before joining us on the program. So without further ado, we're going to keep on rolling right on into our first segment, the Trading Block.
The Trading Block.
All right, everybody, welcome to the Trading Block. You know the drill by now. This is, of course, the portion of the show where we talk about what's interesting, what's trading, what's moving the old markets, what's lighting up the old tape from an options perspective as well. And Senior Andrew, since I don't have access to my screens right now, I cannot access the closing prices. So would you be so good, sir, as to regale us with all of the closing index levels for today?
Ha! You are at my mercy. My mercy. Oh, okay. Sorry. I had a little power trip there. The Dow Jones Industrial Average dropped 1.4% today, a healthy drop to close 16,108. The SPX drifted below 1850 to 1846, down about 1%, a little over 1. The Qs dropped $1.40 also, as in 1.4%, down to 89.28, and VIX, the only thing in green really for the day, although there were some stocks, but VIX up 1.6 points, which is essentially, I know I hate to say it, a 10% jump in that index. Percentage jump on the percentage index. You make me do it just so I say that. I'm going to
tell Mark you use VIX as a percent. He's going to go crazy.
Yeah, I know. But it did, again, VIX jumping, and actually was down this morning into the 13 handle for a little while, I believe, as I remember. It got pretty cheapy down there. But market it opened up, kind of happy, vol in, like it almost felt like, the West had somehow accepted the Russians were going to be in the Ukraine, and then they started, having the spitball war. Germany jumped in, Kerry talked tough, couple people talk tough. Yeah, I think Putin's still watching the Paralympics, so he really didn't say anything. And that's where we are today. I mean, some bad Chinese data, but overall, most of the bigger stocks down. The Russian, the ETF, the RSX, I believe today traded at a 4-year low, probably back to levels not seen since the financial crisis. I mean, in that year of 2009, 2008. So, the market definitely taking it down pretty quickly and not really taking any prisoners, I would say. Just pretty solid selling on a variety. Actually, domestic data was okay, except, of course, for the fact that I guess we're raising we have some new policy on overtime. I guess that's going to really change everything. It's my little political quip. But stocks down across the board. Volatility in the volatility products, I guess I would say exploded today, up to some levels we haven't seen since early February when we had those drops. So, I would say just a good old-fashioned sense of panic, right? Panic, sell off, got to get out.
You know why it sold off so much, of course, is the entire business is down here. So there's no one to prop up those bids whatsoever. You hit them with a one lot and they're going, baby. That's what it is. And collectively, also, the world seemed to wake up to the fact that, hey, wait a minute, this Putin guy is kind of crazy. And that combination always makes for an aggressive sell-off. Mr. Jacobson, what caught your eye in particular from your scenic perch there at Casa Jacobson?
Well, I think Andrew touched on it. And, Angela Merkel yelled at Putin, the DAX cratered. Then the European banks followed. Then the Asian banks followed. If you look at European or Asian bank stocks, they were down double-digit today, which is kind of remarkable. I mean, some were down 12, 13, 14%. And I know whenever I quote a figure like that, a lot of the folks who listen roll their eyes and go, what a geek. But the other thing today was interest rates. And I'll front run the Xpress Block a little bit, but when I pinged the desk today and said, what's keeping you busy, they made a couple interesting comments. They said, it's interest rates, and interest rates. And if you look at our 10-year, the Bund and the Gild, they all had 40 to 50 realized volatility today. I mean, just enormous moves. Our 10-year is closing in the 2.6 area. And I think a year ago when we were on the show, we were fearful of the 3.5 area by this time. So it was clearly a risk-off day. I mean, it was clearly, the contagion seemed to start in Europe, cratered the DAX, and then the rest of the world went along with it. The only thing I will mention, and this is also from the desk, is they didn't see a mass exodus today. They didn't see a lot of put buying. They didn't see people just banging the bids. They didn't see a lot of VIX buying. Today was mostly interest rate plays and people looking for more of a rally in the sovereigns. Stuff was down. There's no two ways about it. Just everything was down, but it was orderly today. So I think in a sense that's pretty good overall.
So no stampeding, no fighting to get to the exits, no chasing those bids up on the tail risk there. None of that. None of the kind of stuff that would signal that this is the beginning of perhaps something a little bit more longer term, a little bit more pervasive.
Yeah, and you can look at that two ways. You could look at that and say, well, that means this time we are going to sell off because we've all gotten complacent to these 2, 3, 4, 5% down moves. And this time we'll get the 10 or 12% down move. But I was stunned by what happened in the EU and Asia to the banks. And I think that's the contagion we got to keep an eye on. I mean, the fact that China's slow, we hear it, and then we see it in copper. And, China's like the one piece of gossip everybody, loves to put up on their screen. The loans are no good. It's all going to come to an end. They got real smart financial people out there. We were the ones who trained most of them. They've got a bank problem. They'll clean it up quickly and move on.
Seems like we've been hearing about that freaking Chinese bank problem for the better part of 15 years. I recall, I think I was still in college when I first started hearing the fact that their banks are not up to Western standards, and if you held them to our standards, every single bank in China would be in default. And that's been a refrain that's been going on for close to 20 years. So I don't know why all of a sudden it's top of mind yet again today. They seem to have survived pretty well with all of their banks being in default up till this point. All right, and also joining us late but better than never, the man from the mountains, a.k.a. scenic and lovely St. Charles, Illinois, none other than Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here now that it's cold out again, now that it's back to being winter, cold day in the market and cold day out in the temperature.
I got to say, these are rough times to be doing the conference circuit here in Florida. So my heart goes out to you, sir, having to shovel all that wet snow while I am in a 75 degrees courtside here in Boca.
Well, it was warm enough yesterday to where I didn't need to shovel the driveway, so that's a good thing.
So big sell-off today, but these are the kind of days you guys over at RCM tend to smile at because it tends to prove your worth to the clientele. So I'm guessing the BBI wasn't too terrible for you today, but walk us through the day that was for Uncle Mike here today.
Well, we had on one of our spec strategies, we actually got out of a calendar spread right at the open, right? Probably maybe like 10 or 15 minutes into the open today. And that was kind of one of those ones to where it was on the Russell. We were short at an 1190 calendar. I'm sorry, we were long an 1190 calendar spread that we were just need a little bit more juice going into today to get out of. And we got the juice we needed. We got out and then the market moved down. So thank God we got out first. That was a nice one. Rolled down a couple puts today on SPY with the put spread that we're trading to finance some of our long puts as well as some of our long calls that are people are trading that do not have long the SPY, the underlying. So rolled down a couple of short puts that were financing plays, but other than that, nothing too crazy on the day to day. Rolled up a put on gold to continue to protect that. We didn't do that today, but we did that between the last show and this show. But days like today, it's one where, ultimately account balances go down, but it's nights like tonight that if for some reason we're at war the next day, then the account's not going to be hurting too badly.
I might have to change your nickname to Put Rollin' Jones because that seems to be your occupation du jour these days.
Yeah, who needs calls? What's the fun of those?
Yeah, just let the top fly high and just put the puts on and let the dice roll, right?
There you go.
Now that's unusual for you to blast out something on the open like that. Was that planned? Did you want to get it off first thing, or did you just happen to get those levels you wanted right on the open, and so you decided to hit it?
Well, we were taking profits, actually. This was on a trade that we got to our profit target right at the open. And so if we're at a profit target on something, no sin in getting out a profit in the first hour. It's typically prefer to trade getting into positions later in the day or getting out of positions later in the day, but if it's not necessarily where we want it to be, but we got the price we wanted, the vols lined up, so not going to complain.
So you're not one of these guys then who kind of likes to avoid the chop of the open and let things settle out a little bit before you take your profits off the table.
Try to let it settle out more, but if we got a profit, I'm going to take it.
As the gambling man said, you got to know when to walk away and know when to run. Like I said earlier in the show, I am down here at the Futures Industry Association Expo here. A lot of interesting stuff. It is primarily a futures show, but it does have an overall derivative slant to it. A lot of option stuff going on here as well. I know a lot of our listeners don't get to attend or even know about these kind of industry-specific events, so they're kind of interesting. I'll just share a little bit of some of the stuff I've seen and heard down here really quickly, give you a bit of an overview for you guys out there, because this stuff does impact you, the retail customer, as well, even though you don't hear about it as often. I'm going to start off. I've talked in the past. Every month I give the rundown for the numbers, what we're seeing for the previous month from an options perspective. Well, all the numbers are in now. Our friends over here at FIA, they do every year, they calculate the total derivatives volume for the year that was from all exchanges across the globe, and those numbers are just in now for 2013, and they analyzed 84 exchanges around the globe, and from a total futures and options perspective, 21.64 billion derivatives, that's futures and options, traded last year. That's up about 2%, a little over 2% from last year, but strangely enough below 2011 and the 2010 numbers, particularly for futures trading. Futures was lighter than those previous years. Overall, the futures accounted for 12.22 billion of that number, so just over half, 56% of total worldwide derivatives volume comes in futures, which is interesting given how little presence futures have, particularly for the retail audience in the U.S. And then options taking the other part of that, about 44%. Overall, equity index and individual equity names and options counted for about 11.77 billion contracts. Total interest rates, options and futures, about 3.33 billion, about 15% of the overall total. So some interesting stuff. Also, some other interesting options stuff going on down here, in addition to all the talk about futures, FCMs, and all that fun stuff. The CBOE is always down here because this is a big show for them, and they are big players in the futures world, as anyone who watches VIX Futures will attest. And they are, as you might imagine, pretty happy about the resurgence, or continued explosion, I should say, really, of interest in all things volatility. In fact, a lot of people have been writing in to this show and other shows on the network, particularly VolViews, asking, when are we going to get VXST options? When are we going to get VXST options? Well, they announced yesterday that they are coming a little bit later than some people might have expected, but they're coming next month, April 10th. So if you're one of these ones who's dying to trade an option on VXST, then that's your kickoff date. Mark it on your calendars. I think that'll also be interesting for the futures as well, because right now the VXST future is not really lighting up the tape. I think it's probably going to really take the options to kick that off. Alex, this is an interesting one, too. I think this probably will intrigue you. They also announced, the CBOE, a strategic investment in a firm called Trade Legs. I think the Cliff Notes analysis of what those Trade Legs guys do is that it's kind of like a very, very, very rudimentary version, kind of like the Idea Hub, but even a little bit different, not so much in the idea generation, but if you're a family office or an institutional customer and you don't know really anything about options, you go into this suite and you say, hey, I'm bullish on this name and I want to have a little bit of income. And you type that into the software and it spits back to you, covered call or short put or something along those lines. So that is pretty interesting in and of itself, because that's not something that's traditionally accretive to the exchange. It's not pushing VIX or SPX or any of their proprietary products. It really is just trying to get more of those institutional institutional clients into the options fold and trying to find an interesting way to do that. Alex, if you had a chance to check out that TradeLink stuff?
Yeah, I did. I actually looked at it when I saw the announcement, and I think it's terrific that the exchanges are raising the bar in the quality of tools that they now provide to institutional customers. And I'm not sure how to frame this, but I hope one day that stuff comes down to retail. It's difficult to bring it down to retail because of the way, security laws are written in FINRA, and it's a fight we had in Idea Hub that hasn't really ever gone away. I mean, periodically we still have to kind of educate the regulators, but just like in electronic brokerage, when it really got good, when the exchanges went electronic and things multiply listed, all of a sudden the competition wasn't only price, but it was tools. And today, if you look at the e-commerce space, there's still price competition, but the tools are the thing that really distinguishes the platform, and I think that makes the customer experience, superior. So I'm glad to see the exchanges do this, and I expect the other exchanges will do this. I know my old shop at the ISE already has risk management tools on the platform, but I think this is great, and a lot of this stuff exists, and porting it over to exchange platforms is a smart idea.
Yeah, it is interesting to see people diving into this stuff and trying to just generally educate the populace, but not the retail populace in this case, definitely aimed at the institutional clientele to help them utilize these things when even a lot of these large funds and asset managers still don't even have a clue about simple things like buying a put or writing a call. So this will hopefully help them in that direction. A lot of other stuff cooking down here. A lot of people may have heard of all the crazy stuff about swaps and SEFs, SEFs. Those are swap execution facilities. That is kind of the hot stuff. Those are starting to trade now, taking all that OTC stuff and trading it on listed exchanges, which is interesting because if that stuff takes off, it might give a lot of our retail listeners an interesting new product category they may want to investigate, as well as all the ancillary derivative type products that may come off of it, like swap futures and indeed swaptions. We may see a lot more interesting derivative products kind of trickle down to the masses there. And on the more general kind of financial front, there's a lot of other exchanges here, stock exchanges, other exchanges, futures exchanges, options exchanges. And it's interesting to see. I've never really heard on any of these kind of exchange leader, global exchange leader panels, all the ones I've been through over the years, people really getting up there and talking about cybersecurity. It's just never been an issue. And all of a sudden it's front and center this year. The Greifeld from NASDAQ was talking about how their exchange has received scontinual denial of service attacks, most of them from Iran, although they're down a bit lately because apparently Iran has moved on. And even Sprecher from ICE, who just bought NYSE, says now their risk committee, when they meet, they don't just evaluate the standard notions of risk that you might have, like portfolio risk and things like that. They also evaluate cyber risk and cybersecurity risk, and that's part of their overall risk profile and their risk committee going forward. So that is a very interesting, and just on probably a more options related note to wrap up, that people always ask all the time, how many exchanges are there? How many exchanges are coming? And it certainly seems like from talking, they had a panel with some of the exchange heads this morning from the options world, and as many have expected, there are more exchanges on the way. It is kind of, people keep asking, why do they do this? It causes so many issues. It's expensive to connect. It's expensive. It causes all these technological failures like we saw last year. Last year was an unprecedented year for options tech failures, and a lot of that is due to the fact that there are so many liquidity centers now that you have to connect to. It's a very complex and expensive process. If you're interested in that, by the way, check out our Trading Tech Talk show. We get into that in a lot more detail there. But very interesting, there a lot of people keep going back to the fact that the regulators don't understand yet, and they will not allow an exchange to essentially charge two different prices for the same contract. That's what it boils down to. So they don't. The spirit of the law is pretty clear. They don't want to obviously disenfranchise one customer. One customer gets something at a different price or something else, and yet because they won't allow that, these different exchanges now have to create what are essentially quote unquote exchanges, so they can charge a rebate for a contract here and then charge let's say a maker taker fee for the same contract over here. So it's a little bit it's a little bit interesting. A lot of you guys who wonder why aren't my spreads filled? Why is execution so bad across, let's say, exchange spread books and all those things? Well, the proliferation of exchanges that we're seeing, and it looks like we're going to continue to see, certainly playing a lot of the role for that. So that was about my take here. People wonder what I do down at these conferences. I do a lot of things, but that's one of the things I get to do. I get to check in on kind of the state of the business. And with that, I think we're going to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. You guys know the drill by now. This is, of course, the portion of the show where we break down the interesting, the unusual, the downright odd, hence the title. Paper we're seeing going up in the old options market today. We're going to kick things off with some call trades going up in Iridium Communications, ticker symbol IRDM. It was trading in the $7.65 range during the day. I don't have the exact closing price. Maybe Andrew will fill us in on that a little bit later. This name we saw, like I said, a lot of heavy call selling coming in today. In particular, not in front month, but rolling on out to June, 6,000. I'm sorry, rolling on out to July, 6,000 of the July 10 calls going up in ranges about 20 to 35 cents. Pretty much no open interest to speak of, only 239 contracts. So this is all clearly opening paper, went up in some mid-size, but mostly smaller size blocks. Looks like it was someone who's really just dedicated to coming in and just blasting out some premium here on the 10 handle, and happy to take his 20 or so cents. Senior Andrew, what caught your eye here, aside from the size, obviously, about these calls going up in IRDM? You said it went up in a lot of mid-size and small blocks. Do you think this could have been maybe a newsletter, or is this just one guy breaking up his trade?
You know what? I think initially there was a sale of an overwrite, and then the vol started to turn the other way. Maybe it was Tucson, after his morning calisthenics, went and bought some Iridium calls. But vol went down and then jumped. So I what it looks like is there was a seller, and then buyers came in. What I would just say is like heavy speculation. I mean, at least they have time till July, but vol was up 12 points. So whoever was selling them at the beginning, somebody different was buying them and taking them up at the end. That's what I thought was interesting about the flow there. So the stock closed 773 on really solid volume for these options. So the only thing I could say is somebody wants to get long this thing. So the buy rider's happy, obviously, but 7,100 ended up trading on the day on 200 open interest. So.
Sounds like someone went to facilitate that overwrite and then said, "Hey, I like this. I want more of this."
I guess so. They were scooping the offer. So they're 35 bid now. The 20-cent kind is long gone.
Yeah, that's unusual to see a size overrider come in and see them bid up on the end of the day. Not the usual way those types of trades go. But hey, I guess that guy's happy he got his kind off, and that's what makes a market, right?
Yes, it does.
All right. Next up, we've got the other side of the coin here. We got some put sellers. These puts were going up in First Majestic Silver Corp, ticker symbol AG. It was trading around the 11.5 range for most of the day today. And what we saw was activity again. A lot of people playing in July today, just a July kind of day, I guess. People trading the July 12.5 puts, blasting out a ton of them, or to be exact, 7,743 of them at some a range of prices around $2 for the most part, $1.95 to $2.05. Again, not much open interest to speak of, only 100 contracts and change. So a lot of opening selling paper here on these July 12.5 puts in AG. Senior Andrew, what else caught your eye here about these AG puts?
Besides the super cool acronym, AG.
It is very clever.
It is very clever.
I'm sure someone I may have known may have once employed that.
Somebody with an Andrew first name. What stunned me, and this is paper I would say that has been in the theme of 2013, we've seen with like all the miners, silver, gold, call buyers, put sellers, just, that has been a recurring theme. I know a lot of option pit clients are looking at the gold miners, the gold miner indexes for some more gains this year. We're looking at like diagonal time spreads, kind of buying the near term in the money option, selling the farther term out of the money option, and kind of letting things sort of drift upward. This is just more of the same. Somebody's selling an in the money put, trying to pick up some juice, crushing the volatility. I mean, this is like old fashioned go bullish paper as far as this is like paper from 1997 where you sell in the money puts and expect to make money.
Are you saying this is pets.com paper? Is that what you're saying?
I mean, people used to do. The stock is $94 and I'm going to sell the 100 put for $15, and like 3 days later the puts would be worth $1 because the stock's up $43.
It worked for the better part of the decade. Who are we to question it, right? I'm not saying this is a bad trade. It's somebody wants to get long in an aggressive way, and they're smoking the volatility to do it. So they could easily be right, and if the miners keep doing what they're doing, the guy's gonna make some dough on this trade. Maybe we have our title for our episode: Old School Bullish Paper. I don't know. What do you think? We'll have to mull it over.
Old School Bullish Paper. I mean, a bull market loves options, so it makes it a lot easier to sell puts. But all
right. Speaking of selling puts, we're going to keep on with the put tip, but not just straight out sells. What we got here are some rolls. So we saw someone legging into some put spreads here in a frequent guest here. A frequent spotlight victim on the old odd block. This is Taiwan Semi, ticker symbol TSM, trading around 19.25 for the better part of the day. And what we saw was some size put activity, in particular 15,000 of the July 17.5 20 put spreads went up for about $1.25. It looks like they were rolling up on some long puts, rolling from that 17.5 to the 20 strike. And when you're seeing something like that, particularly in this much size, you're usually looking at someone who's got some stock on and wants to do a two-saw-esque roll of his put up to a little bit closer at the money strike to get a little bit more meat on those bones and get a little bit more protection for his underlying position. Senior Rock Lobster, do you concur or do you vehemently disagree? And if so, I dare you.
I think this falls, no offense to Alex or an Option Express, but this is a love your broker trade. That's pretty aggressive roll from the 17.5 to the 20. You're already along the 17.5. The stock's like up $1.50, and you're going to roll to the 20s that are in the money, just are almost in the money. So I just found that, let's just say, given the circumstances with the market, maybe they're being overly conservative, but looked like a put roll to me. There was a ton of open interest in the 17.5s. But I think they would be definitely, trying to run up a frozen rope if they keep buying puts, expecting the stock to come down. So I think it's essentially a protected put play. So strangely enough, it's kind of bullish.
Yeah, it is. You don't see them roll into in the money strikes very often. So that is worthy of note in and of itself here in the odd block. This is someone who obviously thinks there's a lot more room to run, or he just wants out and he wants to draw the line right here, this far, no further, and he's willing to pay some extra juice to go up to in the money strike. Again, probably a victim as well of not having as much strike selection out in that name, and he's stuck choosing between 17.5 and 20. Maybe an argument there for some dollar strikes out in that name as well. All right, last up here on the old odd block, a newcomer to the program. We've got Dent Supply International Inc., ticker symbol XRAY, good ticker symbol. I'm amazed that hasn't been taken already. Somehow Dent Supply got it. They traded most of the day, about 45 and a quarter or so. What we saw today, again, keeping up on the put tip, we saw people trading 1,500 a July. Were you just in a July mood, Andrew? Or is that just a paper we saw?
You know what? It was just the paper was looking at July. I mean, the difference is this guy was totally different paper. He's just buying in the money puts, and he's paying what I would think is not cheap prices for them. I mean, he's buying the 50 puts, for $5.40, basically parity puts essentially in a stock that it's pretty low vol stock. So I think he paid actually a lot more than that. He paid more like 90 cents over parity for him.
Yeah, he paid like a buck. I noticed that he paid a buck over for these puts. That's an interesting trade in and of itself. Talk about at the money. Talk about in the money. This guy went even farther than our last guy, buying some seriously in the money puts.
He did. He bought seriously in the money puts, and he paid $1 over for at the time. So
maybe he should take your silver class, Andrew. What do you think?
No. Because see, that only would have saved him $7,000.
All right, why don't you walk us through the full logistics of this trade here, sir?
So a market for these July 50 puts, and it was probably obviously a hard order to execute. It was I think a 90 cent wide market for these puts. They were like, right now they're 510, 570 as they close, but at the time they're like 470, 540 or 560, something like that. There was small paper that bid the puts up at the beginning, and then they filled the entire order, which, again, it's 1,000 deep puts. That's 100,000 shares in a relatively thin stock, so hard to fill. They didn't match it or try to position it at all. So this is somebody that's just looking for Dent Supply to just crack up. I don't see how you buy these puts against stock because you'd waste most of your upside. There's no real open interest, so this is looks like it's just a full – I want to get short this thing. And timing for the market when everything was kind of starting to look ugly, that's when I saw, that's when the trade went up. So, maybe it was somebody who was looking for a shock in here, but we'll see if the stock, cracks up. I mean, they pay a pretty good dividend. It's a company that's kind of sleepy. They make your XRAY stuff. That's annoying things they stick in your teeth, and then they zing you with gamma radiation or something like that. So. It's a stock. It is a very kind of a bellwether. Doesn't go very far stock. So this would be somebody buying puts, looking for some sort of a surprise news announcement or something. Or the Russians march into the Ukraine and decide to blow up the parliament building in Kiev. So any one of those will make probably X-ray go down, $4 or $5.
Or they take over all the dental supply stores in the Ukraine, and there you go. It's the end for X-ray.
Something like that.
We
will no longer buy X-ray.
You never know with that Pooty Poots there, as someone just called him recently. But, it's interesting. On the last show, we profiled someone buying deep in the money calls. Now we're flipping that script a bit, buying some pretty deep in the money puts. Odd stuff going on. People want to pay some time premium out there. I'm not sure why. There are many other ways. I haven't looked at the options chain in this one right now, but there are many other ways I think you could have executed this trade to a bit more effect with the same or less capital. And yet this person decides for a $5 in the money put. C'est la vie. Interesting stuff. We'll keep an eye on this one as well to see how our friend here fares in the coming months. And in the meantime, we're going to keep on rolling right on into our next segment, the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the program where the Viceroy dons his cap and takes us behind the scenes into the land known as Options Express by Charles Schwab. Mr. Viceroy, begin our tour, please, sir. Where shall we start today?
So I'm going to talk about three Options Express and Schwab products today that are in final testing and will be released pretty much any time. The first product is the IRIS, which is the Integrated Rapid Information System. And I think they make the names after they determine the acronym. But IRIS is something you will see shortly. In fact, employees have been testing it, so we've had it for a couple weeks already. But you'll see it in the upper right-hand portion of the page when you log on above the toolbar. And what it is it's going to be an integrated messaging system. So what will happen in IRIS is as we want to talk to you with fills, updates, or news, you'll see them all in one place. So you won't have to go searching for them. So that's pretty cool, and that's on almost any day release. I've learned not to promise specific days for things only because releases involve generally more than one product. The other product that's probably going to be released in the next week or two is Idea Hub for Schwab Mobile. We're in final testing of that, doing some training of the customer service people, and I think that will be out in March. I hope it will be out in March, but it'll come on mobile first, which is terrific with the growth in mobile. So folks will be able to see it off their mobile devices, the phones and the iPads. And the third product, which I've talked a little bit about and then has gotten pushed back, but is now kind of on the front burner again, is Idea Hub for Futures. And it looks like that's in an April release, and that's only a couple weeks away. Call it 3 to 4 weeks away. Idea Hub for Futures will begin with premium harvesting for 4 sets of futures options, the most liquid ones. So we're going to be doing energy, gold, the E-mini S&P, and the E-mini NASDAQ. That's coming as well. And in terms of trading today, as the desk said, it was a risk-off day. Only a couple names lit them up. And as I said earlier at the beginning of the show, a lot of activity in interest rates. But 3 names I see in the runoff at the end of the day: Plug Power, Amazon. Plug and Amazon were both up today, kind of bucking the trend. And something that I keep referring to as the Lulu of last year, Facebook was active today. And that's what was going on at OX today.
Thank you for that, Mr. Viceroy. Amazing how you can keep your finger on the pulse from the OX satellite office there, known as Casa Jacobson. Well done, sir, as always. All right, and now we're going to keep on rolling right on into my personal favorite part of the show. I love this part every week because you guys get a chance to join us on the old All-Star panel. Yes, it's time once again for the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, welcome to the mail block. This is, of course, the portion of the program where you guys get your chance to join us here on the panel, sound off, comments, questions, all that fun stuff. A lot of great ways to do that. I'll let the announcer at the beginning and end of the show tell you how to do that because we're running low on time. Instead, I'm going to dive right on into the first question. This question comes from a user goes by the handle Illin, and he writes, the Bitcoin love continues, guys, so prepare yourselves for this. He writes, are the new Mt. Gox IOUs essentially the first Bitcoin derivatives? This one is kind of interesting. I wasn't that aware of the concept. I had to go check it out a little bit after hearing about this initially. And what essentially happened, you guys remember there was that big exchange. It was like, I guess you can call it the equivalent of the CME for the Bitcoin world. It did at 1.80% of the volume in that product. And it did shut down recently. That, of course, was a big blow to the currency. The currency got crushed. But what happened is there are assets still locked within that Mt. Gox, and people are trying to essentially trade rights on those assets. Essentially, I guess you can call them IOUs on the assets locked up in that Mt. Gox fiasco. So what essentially, in some ways, it does constitute what could be viewed as a derivative. Is certainly the value is derived from another underlying asset that is trading somewhere or is kept somewhere else, and people are speculating on what the value of that could be. So in that sense, from a purely theoretical perspective, yes, it is a Bitcoin derivative. I don't know how much of these quote unquote IOUs or whatever these things are being called, these rights, are actually trading or where they're actually trading. I think there is a move to turn those into some or the other form of digital currency. So it's kind of a whole rabbit hole that people are starting to go down right now. But I guess technically, for all you people writing in saying, when are we going to get options on Bitcoin? When are we going to get derivatives on Bitcoin? This, at least for the time being, appears to be your solution. But I would recommend you proceed with an extreme degree of caution. Alex, Uncle Mike, or Mr. Rock Lobster, anything to add here on our friend who wants to know about Bitcoin?
The only thing I would add is there's a physical Bitcoin exchange now at 40 Broad Street in New York. There's actually a trading floor. It's right down the block from the NYX, and it's physical trading, which means it's cash trading. But there's actually a floor, and you can go and register. Now, can you trade the Mt. Gox little stub that's left? I'm unsure of that, but I will, go out on a limb and say, New York City's got an exchange. And that bodes well for it.
I like it. The little stub that's left of Mt. Gox. That's a good way to put it there, Mr. Viceroy. All right, we're going to keep on rolling into our next question. This is from a listener doesn't go by handle, it's his name. It is Joseph Riggs. And Alex, put your listening ears on for this one. This is right up your alley. He writes, has OX ever thought about creating its own options product that it could then promote to its customers? Is that even possible? And he puts in parentheses, legal, or are new products the sole domain of the exchanges? Is that why there are so many? They're all trying to get into the new product biz. The latter part of that question is probably the easiest part to answer. That is, is that why there are so many? No, we talked about it at the top of the show. There's a lot of other myriad regulatory minutia reasons why there are so many exchanges. Very few of them have to do with creating new products, even though a lot of exchanges try to do that. But short answer to the question is I don't know if OX has ever done this. Alex will have to answer that, but OX could certainly approach that. The exchanges are not the sole domain for creating products. They are the places where you list and trade them, but people can approach them all the time with product ideas. There could be licensing deals in place. Of course, if you're going to create an option, you have to have an underlying first. You have to create an underlying that has to be listed on an exchange, and then you have to find an option exchange to actually list options on that underlying. So it is a multi-phase process. But anyone could conceivably do it if they have the backing and the wherewithal and the interest from the exchanges to actually list the product. So I'll toss it to you, Mr. Viceroy. Has OX ever thought about creating its own product to then parlay to its customers?
So, yes, but you would need to partner with an exchange. And having worked at the two of the largest exchanges and now one of the largest brokerage houses, you partner with the exchange, and some of this is legal, and some of this is also the issue of disseminating quotes and things of that nature. It might surprise people, but much of what is very popular today and much of what the exchanges trade, to your point, they didn't create. They were created by the brokerage houses. They were created by the universities. VIX, for example, wasn't invented at SIBO. It was invented down at Duke. And many things, many of the indexes, the MSCIs, the EFAs. I mean, as soon as I start to mention these things, you see brokerage house names in them and threads in them. So the answer is, could you create something? Yes, but you need to joint venture it with an exchange. Oftentimes the exchanges will reverse the process. They'll have a spark of an idea and they'll walk into the brokerage houses and say, can you support this? But you can't trade it without an exchange. Price discovery would be hard. And you'd have to register it in 50 states. It would be cumbersome.
Just ask those Mt. Gox guys. And the fate of all these Bitcoin exchanges, excuse me. All right, last up here on the old mail block. This one comes in from Listener goes by Ian Getz, and he's actually written into the show, and he writes, basic question. Everyone's on the industry tip today, it seems like. He writes, a basic question, is there high frequency trading HFT in the options market as there is in equities? Thank you. So the the short answer to this is yes, there is. The longer answer, somewhat longer anyway, is that it does exist, but it is nowhere near as prevalent or indeed pervasive as it is in equities. And you could probably see on the surface why that is. Equities are essentially a single price instrument. You know where IBM is trading at every given time. You know, you got some orders in the book around that trading price, and that's essentially it. So it's much easier to flicker and implement that into algos and get in and out very quickly with that type of single price product. Options, of course, a derivative instrument. They have not just one trading price, but hundreds of series with calls and puts and different prices, and you all have to be updated simultaneously. It's a much more laborious, much more complex process to actually do that in any sort of high freak capacity. A lot of people have tried, a lot of firms have done it. Some of the high profile tech failures we saw last year were related to that. But it does exist. It does happen in the options world, but it is nowhere near as big of a component as it is in the equities landscape. Anyone else, Alex, Uncle Mike, or Andrew, want to tackle this HFT and options question?
You're spot on, Mark.
I do have my moments, Alex. I learn from the best.
I mean, even in Liveball, you've got you have an algo plugin that you could do for, pumping out volatility of prices and stuff like that. So, I mean, it's a different game, but it's there.
The thing you realize is, and this is a good news, bad news story, volume in the options market is concentrated in 20 symbols. And much of it then is concentrated in the front at the money stuff. So are there high frequency guys in spiders and Qs and the Russells? Yeah. Are there high frequency guys in Amazon, Apple? A bit, because there's liquidity there. But after that, it drops off. There's a much longer answer, which we don't have time for today, but many of the market-making firms, when they build their market maker trade engines, also by reality end up building a customer engine, which becomes kind of a algo/high frequency. And one day when we have a half hour, we'll talk about that some more. But the answer is yes, kinda, but you're spot on, Mark.
Yeah, if you start getting into what is the definition of high freak, then you could be here for several days. So instead, what we shall do is keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, welcome to Around the Block. This is, of course, a portion of the show where we tell you what we're watching for the rest of this week into the old weekend. Of course, top of mind, given the sell-off today and just what's been going on the macro political front is, of course, Ukraine. Everyone keeping an eye on what's going on out there. What will Putin do next? We also have, like we talked earlier at the top of the show, the continued narrative coming out of China, weakness. We've seen it for a while. We're getting more input on that and how that's relating into the banks and the rates as well as commodities like copper. So we'll keep an eye on that as well. Those are kind of some of the big macro events that seem to really be in the focus here, in the crosshairs for the next couple of days going into the weekend. Again, another weekend where there might be some quite literal weekend risk. So we've said it before on the show here, but maybe another good weekend. You may want to consider having some, if you're long stock, some puts in your back pocket, maybe a few long premium trades for a change. Don't just hit the bids going into the weekend because we've all seen what's been happening over the past few weeks. You don't want to get caught in anything like that. Senior Giovinazzi, what are you watching for the rest of this week, sir?
Watching the volatility in the vol products, kind of using it to hedge some like slightly short term, well, not short term, but midterm long positions. But vol could be anywhere tomorrow. Ultimately, it could be, the VIX could be 23, 24. It could be 14. It all depends on what kind of negotiations these two, the Russians and basically everybody else can kind of strangle out of each other. I think the market's trading pretty much on that. with the fact that prices are so high, everybody wants an excuse to dump it anyway. I think the Chinese thing, we get this basically every quarter where they have bad numbers and a commodity goes down and then it's still growing at 7% a year so it's definitely never good news. But the Chinese market is it's starting to get interesting again from a price point of view, starting to get a little lower, getting closer to 31, 32, kind of the lows of the last year. So, I think the prices of some things are getting interesting again. I still think the emerging markets have been a little oversold. They've been definitely a good trade, kind of selling the dips out of the money. So sort of same thing. I'm not changing that, but as far as vol goes in the market, it could be anywhere tomorrow, really.
It's a shame we have to wait a month for that VXST options to finally launch, because this would be an ideal circumstance for that product right now. We're whipsawing left and right all the time off this crazy macro political news. A product like that is pure, essentially vol gamma, would be very, very interesting right now.
I think the liquidity providers maybe are glad that they're not launching it quite yet.
You're saying they don't want to cut their teeth on it in this kind of environment? I could probably sympathize with that. Yes. All right, Mr. Tusa, what do you keep an eye on for the rest of this week, sir?
Well, obviously, my eyes are going to be glued to the screen tomorrow at the open. Want to see what happens and see how the market reacts to this. Volatility can be anywhere tomorrow. Andrew, that's more indecisive of an answer than I typically give. Come on now. You're given a range between 14 and 23. At least narrow it down. Can you give me 15 and 22?
I feel it's going to move.
It is. Yeah, I think that I'm going to be watching that as well tomorrow with the VIX having a 12% move today. I'm excited about tomorrow. A lot of things can happen for better or for worse, but days like this, keep it fun. I like it.
There you go. And last but not least, Mr. Viceroy, what do you keep an eye on for the rest of this week into the weekend?
I'm looking at the sovereign debt, Angela Merkel and Putin. We'll see how this dance kind of plays out. But I think we've all said it. It's world events, and I would not go home short a lot of premium this weekend. I would own some premium this weekend because something is still got to play out in the Ukraine, and it's going to bring volatility to the market.
Alex, you wild man. All right, that is going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let me quickly check in with each of my cohorts here on the All-Star panel, see what they have cooking that may interest you, the listener. Starting off with you, Uncle Mike Tusa. What is cooking in the land of RCM webinars?
We're going to be talking about some modified condor trades coming up this next week. On a market like this, if you were short a put spread today, you probably have some questions on modifying a condor in one way, shape, or form. Tune in. We're excited.
I like to modify my condors, too. I modify them all the way into iron flies, but we had that conversation already.
There you go.
Are you gonna discuss that on your webinar?
How to
modify your condor to the iron fly. I'll tune in for that one. I will. All right. And Mr. Giovinazzi, aside from iron flies versus iron condors, what else are you cooking up over there in the land of the pit?
We're launching our gold course. Will be our kind of more online gold course will be available next week. It looks like it's on pace. We have obviously people signed up. So if you want basically kind of a soup to nuts, sort of what I would say intermediate trading option trading course, this is the one for you. It's our most popular one. You'll learn everything about iron condors to VIX, volatility products, long gamma, short gamma, how to trade them, how to adjust them, everything, how to look at volatility and read conditions. It's a pretty darn peachy course. It is about a 3-month commitment, but you can download stuff as you will, and you get a couple of hours per week with Mark or I. So it's a good opportunity, really to learn how options work. And after you learn how they work, you actually have a pretty decent shot at trying to figure out how to make money with them.
And what does that retail for if I were a interested participant?
If you were an interested participant, it would come around the tune of $1,500.
There we go, listeners. So if you want to check out more, surf on over to optionpit.com. And no, it's not their GLD options course. I know a lot of you want to know that. It is indeed their intermediate options course. So check it out.
It's a lot of hours of content per week.
Sounds like it. For 3 months, that's a lot of content.
Yeah, it is.
All right, and last but certainly not least, Mr. Viceroy, what is coming up in the land of OX education?
Full webinar schedule, but I'll just showcase 3 events. On Tuesday, March 18th, Peter Lust from the SIBO is coming over, going to talk about integrating volatility into your price forecast. Also on the 18th, Nina's going to do Gamma, so better understanding risk. And on the 19th, David Hightower from the Hightower Group is going to talk futures. All the webinars are free. Don't need an account to attend any of the educational events. Just come over, navigate to optionsexpress.com, click on the education tab.
Sounds good. Everyone should check those out if you haven't. You guys do some great webinars over there at OX. And on behalf of Alex, the Viceroy, and Uncle Mike Tusaw, and indeed Andrew, the Rock Lobster, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to this program. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.